Earnings Preview English, Catalyst Briefings plus Pre-Open Movers. Welcome! In this micro lesson, we'll build a concise earnings preview you can publish fast. We'll state the company, the quarter being reported, and the date of the release or call. We'll explain briefly why the report matters now. Think product launches, macro shifts, or sector volatility. We'll keep the tone neutral and factual, avoiding hype or opinions. Most importantly, we'll promise one clear goal. Answer a single key question by the end, such as, can they defend margins despite slowing demand? You'll walk away with a repeatable structure you can use every earnings season. Use this flow. Lead with the catalyst plus timing. What event is happening and when it hits. In the body, compare expectations versus last quarter so readers see momentum or slowdown. Then, list the numbers that matter. Revenue, EPS, and any updated guidance ranges. Close with watch items plus risk. What variables could shift the narrative, and where the forecast could break. This keeps your preview tight, informative, and easy to scan under pressure. Use investor standard terms. Consensus means the average of analyst estimates. Beat/miss says whether results topped or fell short of that consensus. Guidance is management's forward outlook. Margin is profit as a percentage of sales. Run rate projects performance if current trends continue. Headwinds/tailwinds are negative/positive forces affecting results. Sequential compares to the prior quarter. Year-over-year, YoY compares to the same quarter last year. Pre-market and after hours describe stock moves before the open and after the close. Start with the numbers. Quote consensus EPS and revenue to anchor expectations. Add YoY and sequential changes to show growth or contraction. Mention any recent guidance or mid-quarter updates the company issued, and whether management tightened or widened ranges. Flag unusual comps, like a pandemic spike or seasonality, such as holiday boosts. Example: consensus calls for revenue of 2.4 billion and EPS of 0.62, up 3% YoY, but down 4% sequentially. Management guided to flat volumes due to summer seasonality. Focus on 2 to 3 drivers. First, demand, pricing, and costs. Are orders stable? Can they hold price? And are input costs easing? Next, gross margin trajectory and mix. Is the product mix shifting toward higher or lower margin lines? Then, the updated full-year guidance range. Does management raise, maintain, or cut? Finally, listen for tone and language cues. Verbs like accelerate, stabilize, or tighten, and any conditional phrases that hint at caution. These items shape the market's reaction more than minor line items. Add quick market context. Scan pre-market gainers/laggards and note simple causes. Fresh upgrades, guidance changes, or sympathy moves following a peer's news. Keep it calm. Pre-market has low liquidity, so small orders can move prices. Avoid hype and use plain verbs. Rises, drops, holds. Example: stock rises 2% pre-market after peer beat on margins. Liquidity thin. Moves may exaggerate. This line helps readers frame potential volatility before the bell. Aim for one idea per sentence. Prefer active voice and plain verbs like expects, raises, or cuts. Define jargon on first use. Consensus, the average analyst estimate, implies. Support claims with one data point, so readers trust the takeaway. Freight costs fell 12%, easing margin pressure. Short sentences prevent ambiguity, speed reading, and reduce errors when markets move fast. If a sentence needs a comma and a semicolon, split it. Use this template: company, catalyst, consensus, compare, watch, risks. Example: Acme Q3 on October 25th. Consensus: revenue 1.1 B, EPS 0.45, plus 5% YoY, flat SEK. Watch demand in Europe, pricing power, freight costs, risks, FX, inventory. Add pre-open movers in one short line after. Stay objective, numbers first. Avoid adjectives that signal bias. End with the single key question you promised, such as, can Acme expand gross margin above 38% despite softer volumes? This keeps your preview sharp and actionable.